And ultimately, working will be optional because you'll have robots plus AI, and we'll have, in a benign scenario, universal high income, not just universal basic income, universal high income, meaning anyone can have any products or services that they want.
The U.S. economy is in trouble, and we're going to discuss some of the catalysts and scenarios that would lead to the events that Elon Musk is talking about, with universal high income taking over. The overnight repo rate has just spiked to levels we haven't seen since 2019, just before the COVID pandemic and all the money printers turned on. We're going to discuss how this typically impacts markets and crypto. And in breaking news, Jim Cramer is coming out saying that he can't believe some people on the internet believe XRP will go over $10 this year. And while this is not financial advice, it's worth noting that anybody who's partaked in the inverse Cramer effect trading strategy, which is investing in everything the opposite of what he says, has seen a 56.4% rate of return year to date, actually beating inside traders like the Pelosi tracker, performing at only 46.1%. With fractures in the economy taking place, a bull market that looks like it hasn't even started according to the bull market peak indicators at CoinGlass here, we have a lot of questions and a lot of information to unpack. We've got a huge plot twist to cover on Ripple XRP as well as other epic breaking crypto news. But before we get into that, welcome back to the channel. I am JR, your favorite crypto dad, reporting to you from the 90s Retro Lounge, where some of us have been stuck since the 90s dot-com bubble, trying to navigate the crypto bubble. And as always, you know what to do. Give me a comment, 777 down below if you're feeling bullish, if you're feeling blessed, and you're ready to live your best life. Smash that like button, hit subscribe to affirm it, and let's run into the video. Fractures in the U.S. economy have been showing up with stocks like Caesars and Chipotle dropping down 40 or 50%. People realizing the S&P 500 really is only propped up by about 7 stocks. Berkshire Hathaway has just announced that it's suspending stock buybacks. Warren Buffett is sitting on $380 billion and refusing to buy stocks. It's a pretty loud something is about to break warning, according to Josh Philip Fair on X. Elon Musk is saying that working will eventually be optional and everybody will be given a universal high income. Listen to what he has to say about the catalysts that would lead to a scenario like this.
But yeah, like cars are going to be autonomous. But there's just so many desk jobs where really what people are doing is they're processing email, or they're answering the phone, and just anything that is that isn't moving atoms, like anything that is not physically, like doing physical work, that will obviously be the first thing. Those jobs will be and are being eliminated by AI at a very rapid pace. And ultimately, working will be optional because you'll have robots plus AI, and we'll have, in a benign scenario, universal high income, not just universal basic income, universal high income, meaning anyone can have any products or services that they want.
So
but there will be a lot of trauma and disruption along the way.
So you anticipate a basic income from that the economy will boost to such an extent that a high income would be available to almost everybody. So we'd essentially eliminate poverty.
In the benign scenario, yes. So, like, the way
there's multiple scenarios.
There are multiple scenarios. There's a lot of ways this movie can end. Like, the reason I'm so concerned about AI safety is that, like, one of the possibilities is the Terminator scenario. It's not 0%. That's why it's like I'm like really banging the drum on AI needs to be maximally truth-seeking. Like, don't force AI to believe a lie, like that, for example, the founding fathers were actually a group of diverse women, or that misgendering is worse than nuclear war. Because if that's the case, and then you get the robots and the AI becomes omnipotent, it can enforce that outcome. And then, like, unless you're a diverse woman, you're out of the picture. So we're toast.
Crazy times ahead. What do you guys think? Leave your comments down below. It would actually take to drive our country, our economy to that scenario where people are getting a universal high income, or even some of the other scenarios he talked about. Now on to better news for this video, and the bullish news is that institutions have just set a new record for Bitcoin buying. ETFs and public firms have already bought 975,000 Bitcoin this year, while miners only created 136,000. In a huge turn of events, Steak and Shake is announcing the creation of a strategic Bitcoin reserve. This is actually a pretty cool one, considering they've just recently made some changes on their menus for healthier items as well. They're coming out saying they're donating 210 sats from every Bitcoin meal that they sell to OpenSats Initiative Incorporated over the next 12 months. Good for you guys, and this isn't a plug for Steak and Shake, but if you got one, maybe you want to go and support them. Ripple has officially been announced and featured as a partner on Amazon Web Services, Amazon Web Services Partners Network, specifically confirming that RippleNet is powering global payments through its decentralized financial tech, and sources reveal the team is exploring XRP for corporate payment systems to boost speed and efficiency. You guys can verify this for yourselves at the link provided in this X post, as I have done prior to this recording. But guys, we're talking about the biggest plot twist for Ripple and XRP, possibly seeing, is this what Brad Garlinghouse has been working for all along? According to Paul Barron, every major bank is racing to launch its own stable coin, while Swift pitches neutral rails. The reality: JP Morgan, Bank of America, Citi, Wells, U.S. Consortium stable coin, ING, Deutsche, Unicredit, and 6 others are looking at the Euro stablecoin by 2026. Bank of America CEO says we're ready to launch once the regulations are clear, and we are seeing Congress pushing to have regulation passed even before the end of the year. Banks don't want neutral infrastructure, though. They want control. But here's the kicker: more proprietary systems equals more fragmentation. JPM coin, Bank of America coin, Eurobank coin. Who bridges all the walled gardens? You guys guessed it. It's probably going to be something like Ripple and XRP. Obviously, this is why Ripple exists. This is why XRP and the XRPL exists. This is not confirmed, but is highly speculated as an incredible plot twist. We're going to jump into Altcoin University for a quick market update. Again, the link is down below for Altcoin Pro University if you haven't signed up there yet. Solj coming out with a quick market update from the 31st of October, just yesterday. Many coins that he keeps tabs on the altcoin picks list. Again, you can get access to that if you are in the Altcoin Pro University, have undergone, I should say, 10 to 30% drawdowns. This is to be expected. While they've rallied, most of them have 50 to 200% recently, possibly also because liquidity is scarcer. And this is where we start to talk about what's going to happen with turning on those money printers. And when we see that happening with that reverse repo rate, the banks are asking for money, and that money generally flows right into the markets. That is where we're going to take a look at the markets. First thing we always do before we look at any market news for the day is check out the Wall Street cheat sheet, the psychology of a market cycle. And again, this is not financial advice. None of this in this video is simply informational, educational, and maybe even some entertainment purposes only. Checking out this Wall Street cheat sheet that's been marked up by a very bullish scenario, suggesting the bull market bull run has not taken off yet. I am bullish myself. I wonder where you are. Leave your comments down below. But if we typically run through hope, optimism, belief, thrill, and euphoria, then pull back a little bit, see a complacency high before running into a bear market, this would suggest that we are coming out of hope and the chop that it is in Choptober, running into optimism and belief through November and December, possibly seeing a new Bitcoin high through January, February for that blow off top. We would see some complacency in March. Q1 into Q2 would put us into the bear market. It's a very likely scenario. Raoul Pal kind of extends it a little bit longer into Q4 of 2026, talking about the elongated banana curve. And let's jump into some charts, but first let's take a quick look at the market overview. Looking at CoinMarketCap, we're going to see that we are at $3.71 trillion for the total market cap for cryptocurrency. Fear and greed is in the neutral territory. Fear and greed is in the fear territory at a 33, as also is the altcoin season index. 33s everywhere. And we also see that we've started to tick up just a little bit in the altcoin sector market cap, sitting at $1.51 trillion. jumping over into the charts, something I want to point out to you guys, if you didn't see my video 2 videos ago, I was talking about the technicals on Bitcoin and ETH, and I was talking about this 1100 ribbon that I like to look at. You can run your EMA ribbons, you can on any chart, whether it's a daily chart or 1 hour chart, 1 minute chart, or anything in between, and then you can have ribbons for the 20 candles, 50 candles, 200. In this case, I'm looking at an 1100. It tends to be an institutional indicator, and the way it works is when there starts to be a trend moving in the markets, like we saw back here on this flash crash on the 10th. We are on the daily chart. We look for that 1100, and on Ethereum, for instance, it was a little bit lower down. If it's not anywhere near this yellow 1100 ribbon right here, we'll go and look into, let's just say, here, we'll pull this one up on the daily for you guys. First things first, we'll look for that. Look, it's going to be all the way down here. Shrink this up. Down here at $2,700, right, on the daily. Well, it's not anywhere near there, right? So then we would go back to the 4 hour, and if it wasn't anywhere near there, we would go to the 3 hour, the 2 hour, the 1 hour. We're looking for the candles bouncing off of this 1100 ribbon and reversing, causing a reversal. And the cool thing is that in my video a couple days ago, I was talking about how Ethereum had gone through the 1100. You could see it right in here on the 1 hour. So we got to go down to the 2 hour. It had gone through it on the 2 hour. We moved down into the 3 hour, and it was a little lower. It had gone through it at that point, and we were looking for then the 4 hour, and it hadn't quite touched it. And there you have it, guys. The very next day, yesterday, it on the 4 hour, Ethereum bounced right off of that 1100 ribbon, which is really cool, especially when you look down here at the RSI and see that it started to trend back up, crossed over its own moving average, causing a bullish divergence. So the question is, are we here to stay? Are we here to stay and play? It looks like we've got a little bit of a chop sideways, and in the short term, we're going to be looking for this accumulation and a continually rising RSI. That's what I'm looking for. We'll jump over to the daily candle charts here because that's typically what I'm looking at. I'm much more of a macro kind of picture kind of guy, and to me, I've just been seeing more of a bullish indicator. It doesn't look like we're really ready to round over this top. This looks like a little bit more of a consolidation pattern on Ethereum. And why am I talking so much about Ethereum when we want to see XRP and Bitcoin? Well, quite honestly, that's where a lot of the action is, right? Ethereum is where we have a lot of the NFT projects, the gaming projects, a lot of DeFi projects. It's a giant layer one, and that's where a lot of the money and the liquidity has flowed. So keeping an eye on Ethereum as a big mover for the altcoin season of that. But back to Bitcoin, checking out where we are currently on there, meeting a little bit of resistance around 110,000. We can't get back up to that 112,500 mark, which is going to be right around here. That's what we're looking to get back above, this blue bar, this red zone right here on my chart. Again, my chart's not your charts, so do what you want with it. It's not financial advice, but I'm looking for Bitcoin to run back up. Again, I'm looking for Bitcoin to hold above 108, 107. If we can continue that, we can chop. There's a good indicator that we're going to be moving more towards the upside with this RSI starting to trend upward. Let's go straight through Solana, Aster and the other and Plasma, the other DeFi projects are trending down, but they tend to trend in the opposite direction of anything else that's moving. Like the altcoins, right? It's just the way the liquidity moves back and forth, just flows back and forth. So Solana is kind of chopping sideways. The same thing with ETH. Solana is actually looking like it wants to break out of this symmetrical triangle on the daily chart. I've been talking about this one for a couple weeks now. There's a giant symmetrical triangle that we've been chopping for, and you can see that we've been riding right along that downward trending resistance and staying above this upward trending support. If we can break out of that thing, guys, I'm not saying that this is the target or anything to beat, but the flag pull on that puts us up at a peak of about $284 for Solana, which is huge, right? We would probably meet a little bit of resistance along the way, $235, $250, somewhere in there. Obviously, it's not going to be a straight line up, but we like to look at the flag poles and give ourselves a top target, so to speak, for profit taking. If you say, we're buying at this point or dollar cost averaging down to this point and looking to take profits along the way, that's where you would start to put your targets. Again, not my targets, but that's what I've been looking at on Solana. That symmetrical triangle looks to be absolutely beautiful. It looks like it really wants to break out, which if we extend it all the way down, it probably puts us somewhere within the next 3 to 4 days for a breakout again, that could go down also. Should it go down, you guys see it right there. That's the 1100 ribbon that I'm looking for. This is on the daily chart. And so with the first place we're going to have to back it up to, go to the, go to the 1 hour and see where it's at. Looks like we've already gone through it. Go down to the 4 hour and see where that's at. The 4 hour looks like we're already through that. So somewhere between the 4 hour and the 1 day is probably 6 hour, 8 hour, give or take, somewhere in there is where we would be looking to bounce off of that. It's actually an indicator that we might have some bearish divergence on Solana, but I don't think so, simply because the rest of the market is all starting to move upwards. And Sol is huge, right? They've got great marketing partners. They've got great projects on Solana, and they are just absolutely massive. OG meme coins, SHIB, Doge, new meme coins, GigaChad, they're all kind of chopping sideways on a weekend, not doing a whole lot. We're about that 0.5 to 1% up or down movement. Let's jump into XRP here. At the time of this recording, it's down almost 0.5%. Nothing too crazy, but still chopping through a symmetrical triangle that I just marched out for myself in the last couple days. That's excluding the wick, considering that to be an anomaly from that Black Friday, that October 10th flash crash that we had. So if we exclude that wick as an anomaly, which it appears to have been, again, it did wreck a lot of liquidity out of the market, pulled a lot of liquidity out of the perp markets for sure. If that's the case and we're still chopping in here, we've got plenty of room to grow before this thing chops, following the downward trending resistance and the upward trending support. Could put us all the way out as far as the end of November, really, if we're going to look at it like that. I don't know. We'll see what happens, right? If the government shutdown ends, there could definitely be some ETF approvals taking place. There could be some legislation passed that could put up those guardrails that the institutions are looking so much for. And we've all heard the expression, right? The institutions, the banks, are willing to buy Bitcoin at $1 million as opposed to $100,000, as long as the regulation is in place, right? They want those guardrails in place. They don't care about the price of it. I think that to some extent they want to get low accumulation. I think that they are smarter than they may seem, right? But when you can't beat them, join them. You want to try and follow their patterns. That's where we can look at things like the 1100 ribbon. Tends to be a very institutionally driven ribbon. I like to look at that on any chart that I can, and we'll talk maybe more about that one in some upcoming videos. But guys, if you've got further questions and you want to take this trading education to the next level, I'm going to encourage you to jump at that link down below for Altcoin Pro University, where you can get access to all of these classes after you listen to this.
If you have 10K or more in crypto, you're literally giving up an extra $300 per month in passive income. You're giving up on a free 3 to 8% additional monthly yield just because it's sitting on an exchange like Coinbase or Binance and you're being lazy. You're taught to hodl, just wait for price appreciation, and this is costing you thousands of dollars. So let's see what happens here. While your assets are sitting there doing absolutely nothing and inflation is kicking your ass. For example, Ethereum didn't do anything over the course of 3 months. XRP didn't do anything over a whole year. And Solana, same thing. It didn't do anything for an even longer period of time while you sat there making no money. And I'm not saying that these are bad investments. It's quite the opposite, actually. But the smartest investors in the world make their crypto work for them to generate additional yield. And why would you not do that? You're holding these crypto assets anyways. It's like buying a rental property and not renting it out. If you hold on to the property because you believe that it's going to appreciate in value over years, why wouldn't you rent it out so someone else can pay your mortgage while you still get the value appreciation? So it makes no sense to just hold your crypto without earning yield on your idle coins. And if you're just holding your crypto on exchanges like Coinbase, your assets aren't safe. In fact, Coinbase was hacked for $400 million and the hackers bribed Coinbase employees so they could access sensitive user information, demanding a $20 million ransom from Coinbase, which the company refused to pay.
I want to make you aware of a disturbing email that we received recently at Coinbase. It was a ransom note demanding $20 million in Bitcoin in exchange for these attackers not releasing some information they claim to have obtained on our customers. I'm going to respond publicly to these attackers by saying no. We are not going to pay your ransom.
And I even received a letter in the mail saying that my information was included in that hack. So I'm speaking from firsthand experience here, not just an article that I read online. So not only are you leaving free money on the table by not earning yield on your idle crypto, but you're also putting yourself at risk of losing it all, getting hacked, or having your account frozen by keeping your crypto on centralized exchanges. Because if it's not your keys, it's not your crypto. You already know this, so I don't have to tell you. You can't afford to be lazy with your capital. The US is drowning in nearly $40 trillion in debt. So this is your insurance against the system. To learn how you can earn passive income on your coins every single day while protecting your capital from hacks or scammers, my research team put together a step-by-step tutorial for you to start earning yield on your crypto today. And it takes less than 10 minutes to get set up. All you need to do is go to altcoinpro.com after you're done watching this video, create your account, and click on the Start Here lesson under the classroom, and you'll discover how one liquidity pool is earning our members up to 40% yield on digital assets that they already own. Plus, you can go into the DeFi yield picks and see even more opportunities to earn passive income on your coins safe and predictably with complete control and ownership of your assets. You will make significantly more money by being your own bank. And all you need to do is go to altcoinpro.com to get started right now.